My name is Peter Stephan. I'm the managing partner at SST CPAs and director at the Tax Resolution Institute. What we're going to talk about today is what you do if a client comes into your office and owes money to the IRS or the state. There's a lot of material to cover, so we're just going to give you some sound bites today. There are basically 5 ways to solve income tax collection problems. You can do an installment agreement, just pay it over time. You can do a partial pay installment agreement, pay it over the remaining statute of limitations for collections, which for federal purposes is 10 years. You can do an offer in compromise, you can do a partial pay installment agreement, and of course, you can discharge income taxes in bankruptcy. That's a lot of topics to cover in a few minutes, so we're just going to focus today on offers in compromise. Everybody wants the pennies on the dollar deal. The question is, does it apply? Can you actually grind down a tax debt from $5 million to $5,000? The answer is absolutely. The issue is that sometimes you need to do the planning to make sure that an offer is accepted. Let's talk about offers for a moment. For IRS purposes, offers in compromise are fairly easy. I say that because, unlike state offers in compromise, which is a topic for another day, the IRS offer in compromise program is a very formula-driven process. What I mean by that is that the IRS has a formula. If you fit in that formula, if you fit in that box, if you will, your offer will be accepted. Let me elaborate. The formula for an offer in compromise for IRS purposes is quick sale value of assets. The government wants everything that you own, plus a multiple of your disposable income. Let's drill down there for a moment. Quick sale value of assets is calculated in a number of different ways, but by and large, what we're talking about is the liquidation value sometimes, or the fair value other times, of your assets. So for example, if you own a home and it's worth $500,000 and you have a $400,000 mortgage, for IRS purposes, the value is 0. Why? Because you take 80% of the value of the home, less the mortgage. Thus, we come up with a 0 asset value. If you have a pension plan, the IRS says take 70% because they know you have to pay the taxes on withdrawals from the pension plan. So if you had a $10,000 pension plan, your asset value would be $7,000. Suffice to say that the IRS wants the value of your assets. Now to that, they add a multiple of your disposable income. Nowadays, since the Fresh Start program, the IRS gets 12 times your monthly disposable income calculated using IRS national and local standards. Well, what the heck does that mean? The IRS publishes standards. So for example, if you're a family of 4 and you're living in Los Angeles, you get a certain amount for rent or mortgage payment. It's somewhere around $2,600 or $2,900. It just varies depending on the county you live in. Automobiles, you're going to get a payment of $517 a month under the current standards. Operating expenses on cars, $295 a month. Out-of-pocket medical, $60 for every person in the family under 65, and so on. The point is that you're going to fit in this IRS box. You take your income, you deduct your allowable expenses. No living in Beverly Hills at $10,000 a month in mortgage payment. You have a maximum upper limit, which is what is published in those standards by county and by state. Let's just say that we've come up with the $7,000 in assets and disposable income of $1,000 a month after we apply these standards. $7,000 plus 12 times the $1,000 a month in disposable income equals $12,000. So your offer amount is $19,000. Sounds pretty easy? Well, it is. But you must give the IRS what they want in the way that they want it. They're not very creative, and I'm not saying we need to be creative, but we want to show them the information the way that they want to see it. In order to get your offers accepted, give it to them that way. At the Tax Resolution Institute, we have several programs to help professionals like yourself. If you go to taxresolutioninstitute.org, you'll see what I mean. At the website, you can sign up for seminars, webinars, webcasts, and most importantly, we have a professionals subscription program. In the program, you get access to our full tax library, our full forms library, and probably as important as any of the research material that we've published for you, we give you 1, 2, or 3 hours of consultation time with either myself or one of my tax attorneys here at the Tax Resolution Institute. It's an invaluable tool to any professional who either practices in this area or who wants to practice in this area. Avoid malpractice claims. Use us as a resource so that you don't stumble when the IRS asks a difficult question that because you don't do this every single day, you might not be able to answer. Again, my name is Peter Stephan. Visit us at taxresolutioninstitute.org.